So as I said, our next class for August 2022 question number 4, we shall we shall talk about the suspense account, and specifically we shall do this question for August 2022 question number 4. It's a very, very important question for all of us to understand how we treat when we have an item of suspense. Now, let us read the question for August 2022 question number 4. So inasema the authorized share capital of MLO Ltd consists of 1 million ordinary share of each 10 and 500,000 preference shares at 10 each. That one is okay. Then we have the trial balance, as you can see it there, our trial balance. Additional information number 1, the suspense account raised to 50,000 ordinary shares, which were issued at a premium of 50 each on that 1st January 2002. So we have a premium of 50% from the ordinary share. So they issued shares at profit. So that profit was recorded in the suspense account. Number 2, on 30th November 2021, directors made a bonus issue of 1 share for every 5 shares held at par, fully paid or from the revenue reserve. So the revenue reserve will be used to pay that one. That one is okay. We have the depreciation for building, machinery, and motor vehicle, all on a straight basis. Tax expense for the year amounted to 3.1 million. Then we have the proposal by the directors. So transfer value to general reserve, that one is okay. It will affect the retained earnings account. Payment of the final dividends of the preference shares. Dividend of 5 for ordinary shares. The additional ordinary shares also qualify for the final dividend. Then land was revalued upward by 22 million. So we are required to prepare the P&L account and the statement of the financial position. The question is for August 2022. Question number 4. Now in this question, tukienda kwa juu, we shall start with the gross profit. Reason why? Because we have been given the gross profit. We don't have the sales, and I think we don't have the purchases. We don't have the sales, and we don't have the purchases. So in this case, we shall start from the gross profit. We shall start from the gross profit. We shall start from the gross profit. So let us start the question. So the question is for August 2024, question number 4. So August 2022, sorry. So August 2022, question number 4. So the question is about the MLO Limited. MLO Limited. MLO Limited. Okay, statement of profit and loss. Statement of profit and loss. Statement of profit and loss. For the year ended, that is June 2022. For the year ended 30th June 2022. Kama kawaida, I think the question is in thousand. So Kenya shillings and Kenya shillings. So the currency is in Kenya shillings. So you need to put that one in the face of the statement. So tumesema we shall start with the gross profit. The question haina sales. So we have the gross profit pale in our trial balance. Pale chini, the last item, 3740. So we start with the gross profit. Gross profit. The gross profit tumeambiwa ni 3740. 740. That one is okay. Now, do we have so the first thing you need to check is allowance for bad debt. Now in this question, it is clear that we don't have any allowance for bad debt. So you check if we have any other income. So before you continue, check for any income. But with the view, I think there is no any income. There is no any income. So hakuna any income. So we go direct to less our expenses. So less expenses. So it is our expenses. Now our expenses, we can start with the additional information. And we go to additional information. Information number one, it's not of use for expenses. Number two, not of use. Number three, building. So we start with the building. Building. Remember, it's on stated basis, so it will be 2% on cost. 2% on cost. So what's the cost? So the cost tunaenda hapo kwa our cost pale juu ni 20,000. So you multiply with 20,000. 20,000. So itakuja ngapi? So 0.02 times 20,000. You less. This one is 400. So it's an expense. 400. So our next is depreciation of machine. You can indicate the word depreciation. So let's write the word depreciation. Depreciation of building. Tumesema ni 2% times what? 20,000. Sorry, 2.5%. 2.5% times 80,000. So let me confirm. 0.25. Supposed to be 0.25. Allah. 0.25 times 80,000. Not 0.025. Sorry, supposed to be 0.025 times 8,000. Supposed to be 200. Hapa nilikuwa nimewadanganya. 200. Nitoa wapi hiyo figures juu nilikuwa nimeweka what? Then you have depreciation of machinery. Depreciation of machinery. Depreciation of machinery. Now machinery tukienda pale ni 10%. Nikiona naona. So the machinery cost ni 10,000. Depreciation is 10%. So 10% of 10,000. This is 10% of 10,000. I think this one will be equal to 1,000. That one will be equal to 1,000. Then we have depreciation of motor vehicle. So zilikuwa tutatu. Depreciation of motor vehicle. Depreciation of motor vehicle. Now, ukiangalia huko juu, in our statement huko juu, our motor vehicle cost ni 80,000 and division yake ni 20%. So 20% of 80,000. So 20% times 80,000. So inakuja ngapi? 0.2 times 80,000. That one is not 80,000. It's supposed to be 80,000. Why am I getting this figure? But let me confirm again. Motor vehicle. Yes, it's 80,000. So 20% of 8,000. 20% of 8,000. I think it is supposed to be 1,600. 1,600. So tukimalizana na hiyo motor vehicle. Now, let's check another additional information there. Number 4, corporate tax tunaachana nayo. Directors proposed dividend, hiyo tunaachana nayo. So tunaenda kwa trial balance. So tukienda kwa trial balance, tunaona we have another expense in relation to what? Distribution expense. We have distribution expense 3,800. Distribution expense is 3,800. Then you have admin expense 1,800. I think it is two. So tunasema distribution expense. Distribution expense, which is 3,800. Then administration expense. Administration expense, 1,800. So we can get the profit before interest and tax. So profit before interest and tax. So profit before interest and tax. Profit before interest and tax. So inasema 30,740 minus 200 minus 1,000 minus 1,600 minus 3,800 minus 1,800. So tunapata 22,340. 22,340. This one is 22 340. Now we can less our interest. Less interest. Kama kawaida, our interest, ukumbuke our interest is not in our balance, kumaanisha haijalipwa. So our interest ni kwa bank loan, unaenda kwa bank loan pale. Bank loan yetu ni 12%. 12% of what? Of 6,000. So 12% of 6,000. So we have 12% of 6,000. So remember it is fixed. So 0.12 times 6,000. Let's say you less 720. So kirahisi hiyo unapata profit before tax. Profit before tax. So 22,340 minus answer 21,620. 21,620. And then kama kawaida tax. So less tax. Tax going to in our statement, less tax. So our tax iko kwa our additional information. Additional information number what? Number 1, 3.1. So 3.1. So tunapata profit after tax. Profit after tax. So 21,620 and that 100. So 18,520. So I think about the hapo tuko sawa. Now we can prepare the appropriation account or the retained earning account. So let's prepare the retained earning account or the surplus account. So number 2, we prepare retained earnings account. Retained earnings account or the surplus account or the appropriation account. You can also call it appropriation account. So kama kawaida select the balance brought down. So balance brought down obviously iko in our draw balance. Draw balance yetu iko huko juu kabisa. Retain earnings ndio hiyo. So ni 2,500. So 2,500. Then you are supposed to add profit after tax. Profit after tax ndio hii 18,520. Umetoka hiyo, imefika mwisho bado. So 2,500 plus 18,520 unapata 21,020. So 21,020, and then we can check other. So we can start with the transfer. So let's go to the proposed. So we have some proposal, but the direct. So number transfer to the general reserve. So transfer to the general reserve. Transfer to general reserve. General reserve. So transfer inatoka, so kumaanisha you're going to reduce the amount. Next, payment of the final dividend. So we have the payment of the final dividend ni ngapi? So payment of the final dividend. Now payment of the final dividend. Sorry, not payment of the final dividends from the preference. So we say payment of final preference shares, preference dividend. Payment of final preference dividends. So hiyo lazima tufanye working. So preference dividend ni ngapi kwa swali? Huko juu, naenda huko juu kabisa. So tukienda huko juu kabisa ni 6% of 5,000. So 6% of 5,000. I think ni 300. So that is 300. Haya. Na bado nikitoka hapo naona we have another payment. Payment of ordinary share. Payment of ordinary shares iko wapi? So payment of dividends, wanalipa dividend for ordinary shares ni 5 bob. So payment of ordinary share. Payment of ordinary share. So hapa iko mbili, we start with the final. final wanatuambia ni 5 times number of shares. So how many shares do we have? So how many number of shares do we have? So how many shares do we have? Tunaenda huko juu. Actually tumefanya makosa kidogo. So we have before tuende kwa payment of ordinary shares, tukuji hapa juu kwanza off. So final. So payment of final preference shares dividend, and then we have also payment of interim preference. So this one iko kwa trial balance. So ukienda kwa trial balance we have preference interim ni 150. I don't think sio kama unaiona somewhere hapa. Okay, let me see, ngoja. Now the one which is in the trial balance inamaanisha ishalipwa. So you need to know that the one in the trial balance has already been paid. So remember, the one in the trial balance has already been paid. So yenye kwa trial balance huko juu, the one for interim na hizo zingine hizo zimeshalipwa. So kuna zenye zimelipwa na kuna zenye hazijalipwa. So kumaanisha the 150 huko juu, dividend payment preference interim, you see the 150 there. That 150 is not, it is already paid. That one is already paid. That one is already paid. So kumaanisha hapa itaendaje? Okay, let us put that. Let us just put it 150. 150. So final dividend, that one is okay the way it is. So so we have two type of dividend. We have the one, this one is already paid. Remember, this one is already paid because it is in the income statement. But this one 300, it is not yet paid. So that one 300, it is not yet paid. Or we can argue in this manner. We can argue that the 150 is part of 300, meaning out of this final dividend of 300, let me read the question again. Wanasema that payment of the final dividend of preference shares. Wamesema tu hivyo. Now we know that the preference shares is 6%. It is 6% of the preference shares. Kumaanisha this 150 paid is already here. So hatufai kuweka. So it's already there. So this 150 is already, so this one in the income statement. So tukienda kwa income statement yetu, not in the income statement but in our trial balance, we have an interim dividend of 150. That 150 is already inside here. So 150 is paid. So there is 150 not paid. So we have an accrual. That one we work as an accrual. So we have a 150 which is an accrual which is not yet paid. I think that one is okay. So ametuambia pale that previous dividend, a payment of the final dividend of payment of the final dividend for preference shares. Remember, preference share is 6% of 5,000, so it is 3,000. So they are supposed to pay 3,000, but in the income statement they have already paid 150. So they have already paid 150. So kumaanisha out of this 300, which is tunatoa hapa, 150 is already paid. So 150 is already paid from the income statement. So meaning the balance of 150 is not paid. So it's an accrual. That one is okay. I think tunaachia hapo. You can go to the next one. We have a dividend of 5 dividends of ordinary dividend. So payment of ordinary dividend. payment of ordinary dividend. So hiyo tunaweza fanya working hapa. So wanalipa 5 per share. So how many shares do we have? So tunaenda huko juu tunaangalia number of shares. So tunapanda huko juu. Let us go huko juu tuangalie number of shares. So tupande tuangalie the number of shares. So number of shares unaenda pale kwa share capital. Usiangalie huko juu the authorized. Leave alone the authorized. So authorized is not your concern. So unaenda pale juu kwa ordinary share capital, we have total capital is 6,000. But remember, we divide with the number of the cost per share, so or the par value. Now the par value is 10. So kumaanisha we have how many number of shares? 600 shares. So kumaanisha hapa analipa so 5, so it is 5 times 600, which is 300. So 300. Now before we go to write that 300, tuende kwa juu kwa trial balance yetu tuangalie there was some payment. So kuna 600. So ndio hii 600. Sorry, 5 times 600 ngapi? Hii hata times vibaya. Where is my calculator? So hii ni 5 times 600. This one is supposed to be 3,000. Nimetoa wapi 300? Supposed to be 3,000. That one is okay. So unakuja unaandika hapa 3,000. 3,000. But remember kuna yenye imelipwa in our trial balance. So ukienda kwa trial balance you have an ordinary of 600. So 600 has been paid. 600 has already been paid. So kumaanisha yenye jaripo ni ngapi? So out of this 3,000 kuna yenye jaripo from the 600. So kumaanisha yenye jaripo we have an accrual yenye jaripo, so inaweka tu kando, you just know 2,400. This one is not paid. That one is not paid. That one is not paid. That one is okay. So that one is okay. Alafu tukimaliza kwa payment of dividend, we have transfer. So tuko na transfer fulani hapo ya ngapi? So we have a transfer ama tumeweka transfer tumeweka ya 2,500. And then we have another information number 2. Let's go to information number 2. Information number 2 anatuambia on November 30 November 2021, directors made a bonus issue. So bonus, so the bonus was for every 4 shares. Yeah, you can get 1 extra. But remember this one was paid out of, so remember it was paid out of the revenue account. So it was paid out of revenue account. So we need to remove it here because it was paid out of the revenue account. So how many shares do we have? 600. So itakuwa ni 600 divided by 4. Itakuwa ngapi? 600 divided by 4 itakuwa ngapi? Mami nafanya vitu gani hapa? So anatuambia for every share iko wapi? Actually for every 5 shares, not for every 5 shares. So commercial divided by 5. So for every 5 shares you get 1 extra. But we have how many shares? So our shares is 600. Then nilikuwa nimecalculate hapa. This is the number of shares. So itakuwa divided by 5. So itakuwa ni 600 divided by 5. So this one is 120 shares extra. Now this one shares extra was also entitled for the dividend. So unakuja unasema hapa bonus shares payment. Now remember it was paid out of the ordinary share. So what is the cost for ordinary share? One share ilikuwa na cost 5 bob. So bonus itakuwa ni 120 times 5, which is 600. So this 600 will be paid out of this 600 will be paid out of this account. And remember also this 600 will affect the ordinary share capital account. Remember will affect the ordinary share capital account. But for now tunafika hapo. Tunasema balance carry down. Itakuwa ni 21,020 minus 2,500 minus 300 minus 3,000 minus 600. 14,620 napata 14,620 napata 14,620 14,620. Now we can prepare our balance sheet, then tuone kama it will allow us, it will balance. Let us prepare the balance sheet. Remember we have the issue of the suspense account. Remember we have the issue of suspense account. Tujafanya bado, but we're going to do it. So MLO Limited, statement of financial position. Statement of financial position as at 31st June 2022. Remember our items in thousand. So Kenya shillings. So we start with the non-current asset. Non-current assets. So we start with the non-current assets first. Non-current assets. So the first non-current assets in this question, tunarudi huko juu. Actually tunatumia our balance. Not at all, we can use these items. Building. So the first one tunaona ni building. Building. Now for building, tulikuwa najua the cost was 80,000. We are supposed to less the depreciation 200. Then accumulated depreciation because it was on straight line basis. So remember all those items were on straight line basis. So what's our accumulated depreciation for building? It's 600. 600. So let us do it. 80,000 minus 200 minus 600. 7,200. 7,200. Tunaenda kwa machinery. Now machinery ni 10,000. The cost. Depreciation ni 1,000 hapo. Then accumulated tunaweza pata kwa balance yetu. So accumulated depreciation for machinery ni 1,500. 1,500. To find the final figure. So hii inakuwa ni 10,000 minus 1,000 minus 1,500. Hii inakupatia 7,500. 7,500. Do you have any other? Yes. Now tuko na land kwanza. We have land. Hiyo land ni ngapi? Nimeona we have land. Land ingefaa inafaa kuanza, lakini sawa tu. Land is supposed to start. Then you have motor vehicle. Motor vehicle. Now motor vehicle ndio hii hapa. Motor vehicle we have the cost of 80,000. Depreciation of 1,600. And then accumulated depreciation of motor vehicle is 3,200. 3,200. Inakuja ngapi? So 80,000 minus 1,600 minus 3,200. Napata 3,200. So hii napata 32. So that 200, I think tumemalizana na current assets. So can you go to current assets? Current assets. So kama kawaida tunaanza na inventory. So inventory at the end. So inventory at the end iko pale chini. Inventory as at 30th June, watuambia ni 4,000. I hope you can see it. 4,000. Haya. You can look for receivables. Receivables was not affected in any manner. Receivables was not affected in any manner. So kumaanisha receivables to be the same. Account receivables wanatuambia ni 1,400. 1,400. So that one was not affected in any manner. We also have bank balance. So bank balance is on the debit or on the credit side. So bank wanatuambia iko on which side? Jiona mahali bank iko wapi? Bank and cash balance iko on the debit side, so that's an asset, 2,100. There was no any prepayments or accruals in that manner. There was no any prepayments or accrual. So kumaanisha hizo will be total assets. So there was no any prepayments, sorry. There was no any prepayments in that case. So let us add them together. So 7,200 plus 7,500 plus 80,000 plus 3,200 plus 4,000 plus 1,400 plus 2,100. So then unapata 33,400 or what? 33 kuna kitu nimeweka mbaya hapo. That is land. So land nimeweka vibaya. The cost of the land is 20,000. Land is 20,000, supposed to be 20,000. Tunasema 7,200 plus 7,500. So 45,400. Supposed to be 45,400. So 45,400. Now the land actually the cost was 2,000, but remember the land was revalued actually upwards to 22 million. So this was supposed to be was revalued upwards to 22 million. So it's supposed to be tunasema 7,200 plus 7,500 plus 22,000 plus 3,200 plus 4,000 plus 1,400 plus 2,100. It's supposed to be 47,400. So that's in addition information. That's in addition information number 6. That the land was that what was revalued to 22 million. So financed by so equity. So equity. So tunaanza na ordinary share capital. This one required a working, so tunaachana nayo. Ordinary capital. This one require working. We shall do the working. So for now, we'll just ignore it. Yeah. Retained earnings. Retained earnings. Working yake tushafanya. So we have done the working is 14,620. 14,620. 6% preference shares. 6% preference shares. It was 5,000. Preference shares. It was 6,000 if I'm not wrong. It was 6,000. Revaluation reserve. Revaluation reserve. Revaluation reserve. So we had a revaluation pale ya ngapi? So revaluation tulikuwa na revaluation ya land. It was 20 million to 22. So we have a revaluation of 2,000. Now, but remember we have the revaluation balance. Revaluation ni 2,200. So ni 2,200. 2,200 plus the land was 20 million. Then it was valued to 22 million. So kumaanisha we have an increase of 2 million. So 2 million in 1,000 hivyo itakuwa ni 4,200. So 4,200. General reserve. General reserve. General reserve. Now general reserve also we have this transfer from retained earnings to the general reserve of 2,500. But let us see the balance first. So general reserve, the balance was 500. The balance was 500. But they transfer this amount, 2,500. 2,500. So inakuwa ni 3. 3 million. Kutoka kwa general reserve, you can go to the non-current assets. You can go to non-current assets. Let me use another pen for heading. Non-current liability, not assets. Jumbo anasema assets. So that one is the bank loan. 12% bank loan. Ndio hapa ilikuwa 6 million. So 12% bank loan 6 million. 6 million. Now we can go to current liabilities. Current liabilities. So we can start with the payables, which is the common one. Payables. So payables, nikienda kwa story yetu payables. Payables, account payables is 600. 600. 600. Now you can look for other items. Those items are easy accruals. So you can just write accruals. So accruals. So kulikuwa na dividends. So the one in the income statement was paid. The one in your corporate was not paid. So 150 plus 2400. So here is for balance. And then we have another one. Actually, before the day, we also have tax. Yeah, 3100. It's an accrual. Also interest. It most likely it is not paid. So kama ingekuwa imelipwa ingekuwa kwa income statement. So it could be there in the income statement. Lakini kwa income statement we don't have anything to do with the interest. So ukienda kwa income statement trial balance, sorry. If you go back to a trial balance, we don't have the interest. Kumaanisha kama hakuna interest kwa trial balance haijalipwa. So this one is there to be paid. So it's an accrual. Tax is not in our trial balance, kumaanisha haijalipwa pia. So kama ingekuwa trial balance ingelipwa, so inakuja hapa yote. That 100. Then for ordinary dividend 150 ilikuwa imelipwa. Unakumbuka ukienda kwa trial balance, preference shares interim 150 is paid. So 150 is paid. So 150, so tuamelipa yote hii ni yote ni 300 tunatoa, lakini what is paid is 150 only. Kumaanisha haijalipwa ni ngapi? 150. Then kwa ordinary dividend 600 is paid. So out of this 3000, 600 is paid. Kwa kumaanisha haijalipwa ni 2400. Tunaweka hapo. So here is for balance, ujue kimeturamba. So 150 plus 2400 plus 3100 plus 720. So 6370. 150. Yeah, 150 150 plus 2400 plus 2400 plus 3100 plus 720. If I add them again, tunasema ni 720 plus 3100 plus 150 plus 2400. Hizo tu inatupatia 6370. 6370. So add them together. So total equity and liabilities. So 14,620. Oh, kuna kitu moja tujafanya. Ordinary share capital. So ordinary share capital account. Ordinary share capital account. Tunaanza na balance brought down. Ilikuwa tunasema requires a working. So tunaanza tuende kwa juu. Balance ni 6. Actually balance at the end. Balance carried down. Okay, itakuwa ni 6000. 6000. Now we need to check the items which affect this account. And also another item we need to prepare here, share premium. So hapa kuna kitu nimewacha. So itabidi nime squeeze kiasi. Let me just squeeze it. There's something nimewacha hapa. So tutasema hapa financed by so we have equity. So tunaanza na ordinary share capital. Ordinary share capital. And then share premium. So tuko na hizo vitu mbili, share premium. So we need to prepare two accounts. So if we are supposed to prepare the ordinary share capital account, so let me start with ordinary share capital account, and then we prepare the share premium account, share premium account, and then tunamalizia na suspense account. So tumalizia na suspense account. So hizo ndio account tunamalizia nazo, tujaze hapa. So suspense account must be closed. So suspense account must be closed. So tuanze. Now the ordinary share capital balance brought down is 6,000. So the balance brought down is 6,000. So you need to prepare the balance at the end. So balance brought down is 6,000. So you need to know the balance at the end. So that so the balance at the end inakuja hapa. So tuanze 6,000. Now let us go to information number 1. Suspense account raised to 5,000 new ordinary. So suspense account kwanza uko juu. You can see the suspense account. Tunaanza na hiyo balance ya suspense account actually. So balance brought down. Tuanze tu locate hiyo kwanza. Balance brought down ya suspense account ni ngapi? Wanatuambia ni actually nimeona pale juu, hata before tuendelee, nimeona pale juu bank loan interest paid. So walikuwa wamelipa bank walilipa 7 to 40. So hapa out of this one wamelipa to 40. So kumbuka hiyo iko kwa total balance. So nimeona kuna bank loan. So wanasema hapa kwa ukienda kuchukua total balance, the second last item, bank loan interest paid of 240, kumaanisha kwanza to correct it to 40, kumaanisha how much is remaining haijalipwa. So 720 minus 240, 480. So kumaanisha hapa inafaa kuwa ni 480. Correct this one kindly kwanza. So 150 plus 2400 plus 3100 plus 480, 6130. This is supposed to be 6130. Sawa. So suspense account balance. So nimeona hapo kwa suspense account balance ni ngapi? 750. Now, so let's read the information number 1. Tuambia suspense account raised to 50,000 new ordinary shares which were issued at premium. So they were issued at profit. So we have a suspense account where it was issued at premium. So 50,000 shares. So tuanze na issue first. Issue 50 times 5 ni ngapi? So remember ilikuwa na cost moja, ilikuwa na cost 5 bob. So remember number of shares wamesema ni 50. Moja ilikuwa na cost 5 bob. So hiyo ni 250. And then we have the premium. So share premium. Now share premium kumaanisha 50 was issued at profit. So what was the profit? So the profit would be 50%. So profit is 50%. So 50% ni 50% profit kumaanisha ni 50% times our price ni 5 bob. So what will be the profit? So 0.5 times 5, which is 2.5. So the profit per share ni 2.5. So times 2.5. Itakuja ngapi? So 50 times 2.5. Ama nitakuwa nimewadanganya. Sorry. Nimefanya makosa. supposed to be 50 times 10, the par value. So it was the par value, sorry. So it, because it's an issue, you issue on the par value. So it was issued on the par value. So it was issued on par value. So 50 times 10, this one is 500. 500. Then kumaanisha hapa itakuwa ni 50% times 10. Hii itakuwa ni 0.5 times 10, which is 5 shillings. So times 5. So 50 times 5, 250. So kumaanisha uki-add this account in a balance 750, 750. So kumaanisha this 750 relates to two items. So this 7, so according to this suspect account, hatuko unajua this 750 relates to what, but so now we know that this suspect account relates to two items. Number one, issue of shares. So we have an issue here. Kwanza unakuja andika hapo issue of shares. So we want to close this account kabisa. So issue of shares 500. And then we have premium. So hapa unakuja unaandika hapa hii iko kwa hii balance ni hapa pale juu. So unakuja unaandika hapa premium issue. Premium issue ngapi? 250. Leo tumemaliza hivyo. Aya, number 2, on 30th November, a director made a bonus issue for 1 share for every 5 share, fully paid from the reserve. Now, from this reserve, where is it? The bonus. It was 600. Now, this 600 was paid from retained earnings. Kumaanisha it reduced the retained earnings account. So it reduced the retained account. But which account will be affected? Which other account? Now, the other account which is affected is the ordinary share capital. The ordinary share capital will increase. So 600 inakuja hapo nasema bonus issue. So any issue ina increase 600. So let's find the balance at the end. So this account has been closed. So you unaandika hapo. This one has been closed. So there's no suspect account now. So we know this amount inakuja hapo 500 na this profit inakuja kwa share premium. So that one has been closed. So to add together, so itakuwa ni 6000 plus 5000 plus 600. So 7100. 7100. So hapa kumaanisha ni 7100. Meaning balance at the end is 7100. Hiyo hapo. Kuja unaweka hapo. Let me use another pen. 7100. Aya, share premium also we close this account. We need to close this account to 50. Not we close, but it will be in the next period. So balance carry down itakuwa ni 250. So that this one itakuwa ni 250. So that's how you treat the suspect account. So kumaanisha our balance here ni 250. Now I think when you add all these items together, so for 80, so it's 6130. I think when you add them together, you're supposed to get 47,400. I hope so. 47,400. Okay, let us add. Let's confirm so that we see if inakubali. So 7100 plus 250 plus 14,620 plus 6,000 plus 4,200 plus 3,000 plus 6,000 plus 600 plus this is supposed to be 6130. Supposed to be 6130. So 47. So we napata 47,900. Napata 47,900. What is the difference? So the difference is 500. The difference is 500. Now, what could be the issue? But let's confirm this accruals. Hapa ndio inaweza kuwa kuna issue. So accruals, the first accruals hapa tunaona walikuwa wamelipa 240. So 720 minus 240. So for 80 hiyo iko sawa. So it's okay. Tax ijaripo ni that 100. That one is okay venye iko. Aya, this 300. So what was not paid is 150. Okay, hapa. Na 24 is not paid. That one is fine. That one is fine. Waha. So kumaanisha ile side 150 plus 2400 plus 3100 plus 480. 6130. Bank loan. Let me see bank loan. the 6,000. That one is okay. Payables was 600 actually. That one is fine. So add it again. You can add it again. Uh, okay, let us look for share premium kwanza huko juu. Kwanza nimeona kitu. Share premium we had a balance actually. So share premium we had a balance. So this one, before the issue we had a balance. Balance brought down. There was a balance of 500, then the issue of share premium of 250 kumaanisha ni 750. So hapa ndio tulikuwa tumefanya makosa 750. So kumaanisha hapa ni 500. This is supposed to be 500 ama let me confirm. No, it's 500. It's supposed to be 750. Supposed to be 750. So hapa inafaa kuwa ni 750. So that's a small mistake. So make sure in an exam you counter check vizuri. So mimi nimeona sikuwa nimeweka the balance of 750. So 7100 plus 750 plus 14620 plus 6000 plus 4200 plus 3000 plus 6000 plus 600 plus 6130. Allah. Yote imeharibika 47 400. So I think that one is all about it. So we have a mistake here. Preference shares is 5,000. Preference shares is 5,000. So preference shares is exactly 5,000. Preference shares is 5,000. So when you add them together, so 7,200 plus 750 plus 14,620 plus 5,000 plus 4,200 plus 3,000 plus 6,000 plus 600 plus 6130 natupatia 47,400. That one is okay. So that's how you are supposed to do that equation, and that one marks the end of preparation of the final account of the company.